Hi there, welcome to Kneppy Invests. A few years ago, I was watching the TV show Billions, which features Axe Capital versus some lawyers, Attorney General in New York City. And even though I do like the show, it just seems like they just retread the same storyline season upon season. But I keep coming back to it and watching it. I think it's just because there's some pretty good, awesome acting within that show. Anyway, a few years ago, I was watching one episode, and there was a lawyer whose dad was visiting her, and he gave her a present. She opened up the present, and it was a coffee maker. But it was a Breville coffee maker, and she was absolutely excited because it was simply Breville. And that's when I realized two things. Firstly, Breville had made it, and the other thing, the name Breville itself just means quality. And ever since then, I've been interested in Breville, even though when you look at the valuation of that company, it is quite stretched at this point in time. But this video is not about Breville. But what happened last week in regards to Pointsbet reminded me about Breville 2 years ago. I was listening to one of my favorite podcasts. It's not an investing podcast. In fact, the podcast is called Cover 3. It's about college football in the United States. They have about 4 episodes a week. And on the Friday or Thursday episode, they talk about the upcoming games on the weekend. And there's about 50 games a week in college football because there's something like 130 just in the top division playing. So there might be even more than 50. Anyway, in this show, every Friday, they go through their favorite plays, betting plays in the week. And one of the guys was talking about one of his favorite plays. There was this one team he thought was good value at 4.5 start. And then one of the other guys, there's 4 guys doing the show, interjected saying that there was better odds at Pointsbet. And as soon as the guy said Pointsbet, my ears perked up. And I went, this could be Pointsbet Breville moment. Is this the point where we come to the understanding that Pointsbet have made it in the world? Because just the name Pointsbet is now well known or becoming more well known in the United States. And that's the reason this company has been spending a lot of money on advertising and marketing over the past few years to get their name out there. And the other reason I've become interested in Pointsbet is because after they released their Appendix 4C for the September quarter, the share price is down 25%. A little bit of negative sentiment has come into Pointsbet that has driven the share price down, and that has possibly given some opportunity for those who have been thinking maybe this company has or is overvalued over the past few months. So in this episode, what I'm going to do is go through the company's September quarter Appendix 4C and talk about why the market has driven the share price down 25%. Pointsbet is an online bookmaker, only been around for 6 years, founded in 2015, and they listed on the ASX on the 12th of June 2019. Not long on the ASX, only over 2 years, but during that 2-year period, the company has really grown quite considerably in the financials and also the share price. CEO and Managing Director is Sam Swanell, and one of the major shareholders is NBC Universal Media with a 4.2% stake. That could be because of a deal that Pointsbet did make in regards to NFL maybe. I'm not sure exactly why NBC Universal Media has a significant stake in this company. The market cap of Pointsbet at $8 is $2.1 billion. Again, that might seem fairly high for a company that is not profitable, but Pointsbet is growing at a fairly quick rate. And the ticker code for Pointsbet is PBH. And one of the reasons Pointsbet is growing at a significant rate is because gambling in the United States has been illegal in most states for the longest period of time. And we've been seeing over the past few years, state upon state in USA has been legalizing gambling. And that's why Pointsbet and other gambling companies have been moving into the United States to try to grab as much market share as possible, as quick as possible. And that's one of the reasons Pointsbet is spending a lot of money on advertising and marketing right now. Sort of a land grab to get as much customers as possible. And that spending of money is quite apparent when we look at Pointsbet Financial Year 21 results. Even though the revenue has increased from 75 million in financial year 20 to 194.6 million, a significant increase in 1 year, this company is spending a lot of money. Unprofitable by $200 million and operational cash flow negative by $119 million. That is a significant amount of money this company is burning through. Net cash, $276 million. That has been fluctuating a lot. Now, they did do a capital raising in the September quarter, so that net cash position has actually gone up a fair bit. We'll look at that when we look at their September quarter results. Price to sales ratio, not too stretched at 10.8, and it wouldn't look too stretched if they weren't spending so much money on advertising and marketing. USA clients has increased from 21,000 to 159,000. Again, one of the reasons they're spending so much money right now is to get as many clients, as many customers as they can get in the United States as more and more states make gambling legal. And that's one of the reasons why this company is spending a lot of money. They could spend themselves broke in the future. That is a definite possibility. But at this point in time, management are focused on getting as many customers as possible. So don't be scared off by the amount of money they are burning. But at some point in the time, they have to convert their spending to cash flow, because the whole point of a business is to generate cash for their shareholders. And because, that gives returns to the shareholders, and shareholders like me want money back from their investment. So at some point in time, Pointsbet have to show they can convert winning all these customers, spending all this money to cash flow in the future. Who knows how long that's going to be down the road. It could be 5 years or so. But this is a competitive market. And that doesn't mean Pointsbet will make it. There's a chance Pointsbet won't make it. But the very fact that the word or the name Pointsbet is in the vocabulary of people within the United States is a good thing, in my opinion. Before we have a look at Pointsbet's most recent September Quarter Appendix 4C, just want to go back 1 year to see how this company was performing last year, and then see how far Pointsbet has progressed over the past year. Receipts to customers in the September quarter, first quarter of financial year 21, 38 million. I've already talked about how this company is spending a lot of money on advertising and marketing. They spent 28.6 million in the 1 quarter on advertising and marketing. That's why this company was operational cash flow negative by $10 million in the 1 quarter. They did do a significant capital raising in the September quarter last year, just like they did in this year, and that raising brought in $353 million. So they began the quarter with $144 million and finished the quarter with $457 million. Being cash flow, or not cash, or having a lot of cash in the business hasn't been Pointsbet problem. It's just burning through lots and lots of cash each quarter. And because they are burning through lots of cash, they do have to do capital raisings quite consistently. That's the one problem with spending a lot of money on advertising and marketing, just spending a lot of money grabbing as much clients, customers as possible. You do have to do a fair few capital raisings to inject capital or cash into the business. So that's one negative thing about Pointsbet right now. Now let's go to the most recent Appendix 4C, the September quarter, the first quarter for financial year 22. Receipts are up $34 million to $72.4 million. Now, we'll also mention right now they did another capital raising, bringing in another $400 million of cash. They also received $35 million of options. So that's almost $500 million that came into the business. However, a lot of their costs increased quite substantially from last year to this year. Advertising and marketing increased $18 million to almost $46 million. That's in 1 quarter. So that translates to almost $200 million on advertising and marketing per year. Again, the whole reason they're doing that is try to win as many customers, clients as possible to get their name out there. And it seems to be succeeding just based off that one podcast. Staff costs up $13 million from last year, from $6 million to $19 million. So a fairly significant increase in the amount of staff they're employing. And even product manufacturing and operating costs up $14 million to 33 million. And because costs increase at a greater rate than receipts, in fact, costs were increased by about over $10 million more than the receipts. That meant the company is even more operational cash flow negative in this quarter compared to 1 year ago. In fact, they bled $26.6 million in this one quarter. That's over $100 million per year. Again, they need to continually need to do capital raisings to maintain that operational cash flow negative state of this business. But again, the way you argue pro Pointsbet is they need to do this to win as many customers as possible. And I've already explained that at some point in time, they need to show to me and to the investing world that they can translate eventually all this spending to cash flow in the future. Who knows when that's going to be, but eventually they will have to do that. The question is, why did the market react so negatively to this Appendix 4C? Share price down 25% over about a 4 trading day period. And I think it all comes back to market share. They've mentioned in the past they are aiming for a 10% market share in all the states. And in their Appendix 4C, they do give us the market share in each quarter. If we go back to the last quarter of financial year 21, that's the June quarter, they have a market share for 6 states: New Jersey, Illinois, Michigan, Indiana, Colorado, and Iowa. In fact, the market share in New Jersey and Illinois were 7.8%, Michigan 4.9%, Indiana 5.5%, Colorado 5%, and Iowa 3.1%. But the real concerning thing is when they gave us their market share for the quarter 1 financial year 22, lots of their market share had fallen by quite a bit. In fact, New Jersey market share had fallen from 7.8% to 3.9%. Illinois had fallen from 7.8 to 7.4. Michigan fallen from 4.9 to 3.7%. Indiana 5.5 to 3.5%. Colorado fallen from 5 to 4.7%. And Iowa 3.1 to 2.9%. And they've just opened up business in West Virginia. And I think that's the reason, the loss in market share is the reason why the market has reacted negatively to Pointsbet Appendix 4C. And that's why the share price is down 25%. This is concerning, particularly because their aim is to get 10% market share in each state. I think the question is that trend going to continue in the next few quarters? Are they losing business to their competitors? Maybe some of their competitors have way more cash to spend in advertising and marketing. That is potential because some of the competitors are fairly big names in the gambling area. So that's one of the problems Pointsbet will have to deal with over the next few years, just the fact they have significant competitors. And the other question I do have is, how does Pointsbet stand out from their competitors? What advantage do they have? What moat do they have? And I'm unclear on what exactly competitive advantage Pointsbet have. If you do know, leave a comment in the comment section of this video because I'd love to know exactly the moat that Pointsbet have at this point in time. When we look at the receipts history for Pointsbet, since they listed on the ASX back in the middle of 2019, you can't argue that this is exactly what you want to see for an investable company. Cash receipts increasing through time. There's only been maybe one quarter where receipts have gone backwards, and that was in the June quarter 2021. Receipts went back from 64.9 million to 62.5 million, but the trend has gone back to what we have seen over the past 2 years in the most recent quarter. Receipts have grown from 7.4 million in that first quarter to 72.4 million in the most recent quarter. That's a growth rate of 29% per quarter. You'd be very happy if that sort of growth rate was per year, but this is per quarter. So you can't argue that this company is not growing. They're definitely growing. I just think it's that fall in market share in each of those states is the reason why the sentiment in this company has turned a little bit negative since the release of their September Quarter Appendix 4C. Now, in saying sentiment has turned a little bit negative since the release of the Appendix 4C, that is true, but sentiment had turned negative before that. In fact, we did see the share price rise or get to a high of about $17.50 towards the start of this year, and the share price has been falling ever since then, and actually turned into a downtrend towards March or April of this year. So the share price of Pointsbet was already in a downtrend before the release of the September Quarter Appendix 4C. So there was a little bit of negative sentiment already in the market. And I think the release of this Appendix 4C just amplified that negative sentiment. The share price right now, around $8. The share price is up a little bit at the start of trading on the 3rd of November. I am recording this video about 1 hour after the start of trading, but the share price, we'll say, is around $8. And the last time we did see a share price this low was just before they released a significant announcement in August of 2020. So that's the last time it was this low, and there's no reason to think that the share price won't go any lower from here. There could be a bit of a bounce because the share price has decreased 25% in about 4 trading days. And usually when you see such a significant decrease in share price, there will be a bounce as some value investors come in. They see possible value right now because the share price is $8 compared to where it was at the start of this year at $17.50. So there is a bit of recency bias. They think it's cheap just because of where the share price was in the past. But the trend is there. The negative sentiment is still negative. The share price could fall quite a bit further from here. But I think right now you will see value players come in trying to pick their bottom of the share price. And a lot of times it's really hard to pick the bottom. And what I'll be doing with Pointsbet is just waiting till that negative sentiment starts to wane away. And we'll just see the share price start to level off, move sideways, and then hopefully we'll see a breakout in the share price on some positive news. And there's a chance that positive news could be in the next Appendix 4C that will be released towards the end of January. That is all I have for this September Quarter Appendix 4C video for Pointsbet. If you have any questions, thoughts, or opinions about Pointsbet or any other company on the ASX, I'd love to hear your opinion. So leave it in the comments section of this video. Now, in that last slide, you might have thought I was giving you advice saying this is what I would do, but that's exactly what I was talking about. This is what I would do. If I was thinking of buying into Pointsbet, I'd just be waiting, being patient, waiting for an opportunity to buy in when the market is telling me that the sentiment has shifted. That's just my opinion for my own investing strategies. If you think there is good value right now with Pointsbet, go ahead, buy some shares in Pointsbet. The whole reason I'm mentioning this is because I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.